Good day, everybody, and welcome to the VectorVest International User Group Forum. You can see it is Saturday, June 7th already, 2025. I'd like to welcome everybody here. As usual, as you know, folks, this is broadcast live on the VectorVest YouTube channel. So you can see the message there. Please make sure your computer speakers are turned on to hear the audio portions of this webinar. The recording will be archived on the VectorVest YouTube channel and available shortly after the webinar. All right, but I'd like to welcome everybody into the room. Thank you so much for joining us, spending part of your weekend with us. As usual, we have a excellent show lined up for you. Let me just go to the chat here and see who we have out there and where folks are coming in from. I see pretty active chat here already. And yeah, we're looking at Douglas in Whitewater, Wisconsin. Hey, it's just Jay today. Good to see you there, Jay. Long Island, New York for Jay. We've got Cecilia telling everybody good morning. Don's out there. BC, I think, for you, right, Don? We've got Haas from Alabama, Decatur. And let's see, Raul from Puerto Rico. We've got Alan from Melbourne, Australia. We're going to have some Australian content here too. Well, I mean, we have Australian content, but we'll have a little bit more in this session. There's Nectarios from Montreal, and I'm just going to have to, I know I'm going to miss people. Hey, there's Bob from New Brunswick, Marguerite from Oakville, Martin. There we go. There's Martin. There, Erwin, good to see you from Saskatchewan as well, and Andy from Maryland. So, of course, I won't be able to get everybody, but you can see we do have an international audience, and we actually have an international cast ready for you today as well. All right, so let's start moving through our slides. Here is the risk disclaimer. As everybody knows, there is risk in investing. So everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we have that out of the way. I do have the slides we put together, just letting folks know how they can improve the resolution. If you are looking at grainy, lower quality video, you can see here I'm showing this on a PC, of course. So it depends what device you're watching on. You'll have to search for that gear icon. All right, so to adjust the video quality, you locate the gear icon. You can see I'm pointing at the one that I would go to on a computer here. All right, so you click on that, and that will bring up the quality options. All right, and you can see for mine, at that point, it was at 720p. But if I click on quality here, I then have the option to select something else. You can see it was selected to auto. So YouTube will kind of try to figure out for your computer setup what quality they can send your way. So in my case here, I end up selecting 1080p. And then once that's done, you can see by my gear icon here, I now show HD. All right, so if you are looking at grainy, lower quality video, if you go through those steps, that should fix that issue for you. All right, so that brings us to the agenda for today. My pleasure again to be hosting the International Forum. Now, I left everything in this order, but we are going to have a change for today. All right, so we will do the global market review. However, we'll be doing it after our keynote presenter, which just happens to be Miss Susan Hayes Culleton, Managing Director of VectorVest Europe. Her presentation is entitled Navigating Earnings Season with VectorVest. I don't know, what is it with you and earnings, Susan? What is it? Why do you love earnings so much?
Oh, I just think that they're so indicative, Rick, of the world we live in. I think it's just so interesting to see the dynamics of how CEO and the rest of the investor relations team interact with the audience. I think there's so much talk these days around AI or geopolitics or sustainability or a range of other big ticket items. And a lot of it tends to be quite, discursive, but not very tangible. Whereas when it comes to an earnings call, you see exactly the types of things these companies are doing. And also looking at the Q&A as well, looking at the questions that the analysts ask. Just, I think earnings calls are such fantastic education, whether you're an investor, whether you're a student of economics, whether you run your own business, or whether you're a presenter at the VectorVest International User Group Forum either.
That's right. So we were talking before, and I mentioned to Susan before that she has sent me down some rabbit holes after some of her earnings presentations during the forum. You can see the agenda there. So we will do the global market review after the keynote presentation, as well as trade ideas. And all of this will take us to somewhere around 12:30, where we'll adjourn. All right, so a reminder, the replay will be available on the VectorVest YouTube channel immediately after the webinar. All right, so with all of that said, we are going to jump right into it. We're going to get Susan right up early this time. She does have other things on her agenda today, like, I don't know, probably whitewater rafting or surfing or paragliding, who knows. But here we have Susan navigating earnings season with VectorVest. Take it away, Susan.
Brilliant. Thanks so much indeed, Rick. Well, hello, everybody. And it's really great to be back here again to see you all. Likewise as well. I've been looking at the list of places where you're tuning in from, and you're most welcome. Now, I know that I speak quickly. It comes with being Irish. It comes with having a great passion for the subject. And it comes with simply being me. So if at any stage you want me to clarify anything, please do pop it there into the chat. I'm keeping a look at it right down here. And obviously, of course, if you are watching this when we're not live, please do put a comment there into that section, and we'll do our best to get back to you. Right. So what I'm going to do now is I'm just going to first of all ask Joey if I could go full screen, please. And I just want to have a chat with you first of all, those of you who are tuning in with us now live. Right. First up, earnings season. What is it? Well, it is a time of the year and a time in the earning or in this investing cycle whereby companies come out and they share what's going on in the company. So they share what's happening with revenue. They talk about what's happening in terms of margin or profit. They talk about what they're investing in. They give guidance on what to expect down the track. They also talk about where they're at now relative to guidance that was shared before. They talk about the big bets, etc. And should you tune into any of the big, financial channels like CNBC, etc., a lot of the news cycle that's driven around companies can be tailored around this. So over the years, as Rick said, when I come on here, round about once a quarter, I generally like to take a company and extract the real insights from it, and then look at what is VectorVest saying and what did it say before the earnings call. But also a couple of things that I just think other people miss. And there's a couple of things that I'm going to pick up on today that exactly ties in with that. Often remember, if you're on live media and people are responding to it, they can respond to the big things. But when you have someone like me that has a chance to really dig into it and cross compare them with other things that are going on, or compare with other companies and their earnings calls, etc., we have a chance to get into the nuance of it. And of course, the fact then that we have the proprietary information in VectorVest, it gives us another view on top of that. What I'm going to do today is I'm going to start off with the headline that screamed from the Financial Times at the beginning of the week, because I think that sets the tone for what we need to talk about on an overall stock market basis. Then I am going to get into the stock that I want to really deep dive on, and that is Broadcom today. I'm going to tell you what Broadcom does. I'm going to tell you what Broadcom does in comparison to NVIDIA. And then I'm going to get into the key talking points that came out at the top level. And there's one thing that I want to particularly pick up on from the prepared remarks. And then I want to delve into a couple of elements that happened in the Q&A, in the questions and answers section with analysts. And then after that, I am going to finish up by just taking a look here and seeing what's going on there in the chat as well to see what you're looking at. In previous forums, I have looked at Salesforce, I have looked at Apple, I have looked at the Magnificent Seven, I have looked at Lululemon, I have looked at, and generally I pick a stock that has been recent as well as that, because I could talk to you about the Magnificent Seven this time, but the earnings were out right across the month of May. And the last thing I'll say on them is that they genuinely are exactly what I said to Rick earlier. They're actually a great education in their own right if you truly want to understand the business. Now, Broadcom, a company that probably is not very, very familiar to you all in terms of paying for its services. Like the other ones I mentioned, Apple, right? A lot of us, including me, have an Apple iPhone. Lululemon. A lot of people, like Rick there was mentioning all sorts of things that could be up to today. Believe me, whitewater rafting in the coast of Ireland is not on the agenda at all. But I was in the gym earlier on today, and there I could have been buying Lululemon products, for example. Now, it's very unlikely that me, in my personal perspective or a professional perspective, would be paying for Broadcom. Yet the likelihood is that I use it every day, because the technology that they produce is something that is in the back end of Wi-Fi, it's in the back end of Bluetooth, it's in the back end of data centers, etc. So while you may not necessarily be thinking, oh, I don't subscribe necessarily to Broadcom, you probably do in a circumventative way. So I'm going to tell you all about that as well. Okay, now, first, interesting here, I'm just going to take a look. Just Jay today says AVGO, you know, I remember when I came across Broadcom for the first time and I saw AVGO, I thought, you know, I just thought avocado. That's what came to mind, because ordinarily, like when you see something, let's say Apple, right? Apple's ticker code is AAPL. Broadcom is AVGO, exactly like you say. Just Jay. Who else here have we got going on? That we have, Martin says, yay, Susan, great. And also, oh yes, Robert says, hey, Susan, greetings, was from Belgium, staying in Spain, retired. Oh, you're getting around the world there. All right, so now what I'm going to do, Joey, just to give you the heads up there, is I'm going to share my screen. And what I'd like to do is I'm going to start off today with this headline that screamed, as I say, from the FT on Monday, that I think just sets the scene. Okay, now I am just sharing my screen there. Okay, and Michael says, hi. Oh, interesting. Mangala says AVGO is overbought in your opinion. Interesting. VectorVest thinks the same. Now, here we are. I'm just going to make sure there that that's visible on your screen. Right. This was a piece by Sam Fleming in the Financial Times on Monday, and it was about the OECD report. Now, I've since gone on and read quite a significant amount of this OECD report. Really, really fascinating insight, primarily of a more economic perspective. But the reason that I'm bringing this up to you today is I want to get to this point, EQUITY, yeah, is that a number of times in this report, now it's 280 pages long, and it is really interesting if you're someone like me. If you want to get to the headlines, you can simply Google reports about it. But this is one of the pieces in the report, but also in Sam Fleming's piece that I want to refer to, is historically elevated equity valuations are increasing vulnerabilities to negative shocks in the financial markets. Now, broad-based discussion here is that the stock market is ignoring an awful lot of what is going on economically and geopolitically around the world. As we all know, the stock market has recouped the losses that happened since Liberation Day. Now, year to date, the S&P is down around about 2% year to date. And so, like, you know, we haven't seen the growth that we've seen over the last couple of years in the stock market. But broadly speaking, an awful lot of the uncertainty that's being either felt or written, etc., is being discounted by the stock market or so. And that is the way in which a body like the OECD would deem. And it's just picking up there on Mangala's point about being overbought, is that then when I went over and I looked at VectorVest's perspective on this stock. Now, Rick later on is going to go through broad-based market valuation, right? And so I'm going to leave that with him. I'm going to look at this specifically from a stock market valuation point of view. But when I looked at this, Broadcom is absolutely in overvalued terms from a VectorVest perspective, and the results were sparkling. Right, the results were really, really good. And when I'm showing you the growth of the revenue, when I show you the growth of the margin, when I show you the trajectory into 2026, when I show you how they're paying down debt, like really, if you were to look at this earnings call in its own right, on its own, you would say, right, that this is really, really good. And by the way, if you went back over the Magnificent Seven, like Microsoft had a sparkling last earnings call. Apple had a really, really good one as well. Microsoft had an excellent one in recent times. But of course, that's the business telling you about the business. We are in the business of investing, and therefore it is really important not to confuse a good stock and a good company. And that's where I really want to get into the nuance of today. Now, before I go get and actually analyze the company, not from the earnings call point of view, but simply the company itself, I do want to point out this button down here, the events viewer. So for those of you who are VectorVest subscribers, of course, when you log into viewer, this is where I am. It's the tab up there at the top. If you click on viewer and then events viewer, in there for you all, you'll see the earnings calendar, right? So you will be able to see every earnings call that's planned into the future and into the past. So you'll be able to see what's coming up, what to look out for, etc. For any of you who aren't VectorVest subscribers, Joey, if I could kindly ask you to just pop a link into the chat there for a trial, so that if anybody wants to be able to get a trial and to keep up with me, then they'll be able to do so right away. Just want to make sure that we have everybody there. Okay. Now, Donald asks the question, why overbought? Okay. Now, I will say there's a difference between overbought and overvalued, but I'm going to focus on overvaluation here, right? Because as you can see here, in the case of Broadcom, what we can see is that the value of VectorVest value of Broadcom is currently $162.94. The price is $246.93. If, of course, you looked at that price a day ago, now, obviously today is Saturday and yesterday was Friday. This is live, as Rick said. So when I say a day ago, I mean Thursday's closing price. That price would have been 5% higher. Despite the fact that Broadcom had such a list of returns in terms of, as I say, revenue and profit and so many others, the stock market just said it's actually not growing as quickly as had been anticipated. So therefore, the results have been dampened down a bit. So the valuation of Broadcom in comparison to the price has actually tightened up since these earnings. But that very much is the view at the moment. And I'm going to just delve into the stock here a little bit more. So as you can see here, if I scroll in there, yeah, you can see that there is that the price did fall 5% yesterday on the results. And I'm just going to just pop on down here. Now, it still is a buy, right? And you might say, well, why is it a buy? This is what I'm saying about the overvalued and overbought, right? Just because a stock is overvalued doesn't mean it's necessarily going to fall. And when, as Rick will do, when we look at market timing in VectorVest in general, we'll often talk about, getting your shopping list ready, but then we also talk about when you've actually got triggers to move into the market. And a stock, I could look at a couple of stocks in my portfolio at the moment, some that are overvalued and I'm still in there because I think it can still keep going. Some that are undervalued and have had a phenomenal run already, particularly the top VST stock in Europe called Heymans. I think that's how you pronounce it. I've only bought that stock a little while ago. It's up 9.5% in a couple of weeks. And that's building on a really significant increase over the past year or so. And now it's still undervalued. I'm really happy with the stock. I'm really happy with its performance. But the younger version of me would have said, God, it's up 10% in a couple of weeks, right? I don't think it can sustain this momentum. But I don't make decisions on price. I make decisions based on value and on where the overall European market is. And if I was to hear and I was to talk about that, that would take up all of the time that would be dedicated towards my session. So I'm not going to get into European stock markets, even though Rick will, our European relative outperformance this year. I could talk about a range of those things, but I just want to distinguish the point about having a stock in your portfolio that number one has done well, that number two could be overvalued, or that could be doing well and undervalued. So in this case, the stock of Broadcom is a buy, and that is driven by four things. Number one, its VST is above 1. To those of you who aren't familiar with that term, it's a VectorVest proprietary term, and that is a combination of value, safety, and timing. So that's a combination of fundamental and technical indicators, and above 1 is favorable, below 1 is unfavorable. Since Broadcom has a VST above 1, as a result, that is one of the reasons the stock is a buy. The second thing is the RT, the relative timing, is above 1. Now, what relative timing refers to is the direction, which is up. And now it doesn't just look at the last day because that was down. It's the last day, week, month, and year. The overall direction of Broadcom has been up. The magnitude of it has been up, has been positively moving to the upside, and the dynamics as well. So RT is above 1. Third thing is the price is above the stop price. And the stop price is a 13-week, which is quarter of a year, 13-week moving average adjusted for risk. And then the other thing is the price is rising and it's diverging away from the stop price. Okay, so that's why the price it's there a buy. So can a stock in VectorVest be a buy and overvalued? Yes. That's why. I've exactly explained to you now how this works. If you want to delve more into that, what I suggest you do is either get the green book, as we call it, that explains all of the VectorVest indicators, and will give you a more elaborate version of what I've described to you. And you can either get that on Amazon, or alternatively, and it's called Stock Strategies and Common Sense by our founder, Dr. Toledo, or alternatively, like I say, if you want to take a trial, you can download it for free in the trading tab of the program. Now, let's move on here. So VectorVest says Broadcom is overvalued even after the 5% drop that happened that happened on Friday, which is yesterday's trading day. Also, but down here, the relative value of the stock is excellent. And what is relative value? Well, relative value is looking at the price potential, capital appreciation of the stock from 1 to 3 years out. So basically, what this is saying is that it's overvalued at the moment based on what's going on in the company at the moment. But when you look at the expectations of the company's earnings into the future, perhaps the price is behind and it needs to catch up with the respective value. So that is, of course, sometimes people say, okay, hold on, now what? You're telling me it's overvalued, but the relative value is up, and that's why nuance matters here. Looking into the longer term being 1 to 3 years out, the relative value of Broadcom is quite high. Right now, today, there's an overvaluation there. That's not to say the stock might necessarily fall. That's just to say that the difference between price and value may need some time to converge. Okay. Now, this is the one to watch, though, if you are more of a more prudent or conservative investor. This indicator here, relative safety, is one we love in Europe in particular. Our Belgian subscribers, including any of those of you who are joining me from that part of the world today, this is generally the one you look at first, relative safety, which is predictability and consistency of earnings and dividends. And it's just interesting. I'm going to bring you to one question in the Q&A of Broadcom that will just show you about how one analyst in particular, very, very insightfully, just looked back at what they had said over previous earnings calls, projected it into future earnings calls, and just drew a line between them, highlighting the predictability and consistency of various different metrics. VectorVest does that all the time. So as you can see here, relative safety is 1.41, which is excellent. Obviously well above 1, so it's excellent on a scale of 0 to 2. And then overall, Broadcom has been broadly rising. Like I say, this is a combination, as you can see here, of day over day, week over week, quarter over quarter, and year over year. And then therefore, the VST is high. The VST is 1.56, which is very high. So when you look at the two of these, you can then see that we have the RT at 1.76, VST of 1.56, independent of the numbers after 1. They're both over 1. So that's a key part of why the stock has got a buy recommendation. The stock price is well below at 207, so there's quite a distance to fall before this stock would be headed into sales territory, into a sell recommendation territory. And then this is always one, if you're a longer term investor like me, and I'm looking at some stocks now that I've had for quite a period of time. Like, I'm not averse to having stocks for 10 years. I'm not an investor or a trader that needs them for 10 minutes or 10 days. And that's why I have Haymans. And that's why I'm going to continue to have it, because I bought it because of a high VST rating. We'll see where this goes. But I like the comfort index. I think of anybody in VectorVest, I'm the one that likes it most. It's something I really like to look at it over the long term. I'm also an options put seller. I'm somebody that likes the CI, which is the long-term ability to resist severe and or lengthy price declines, and that's where it's less. This is why somebody like me looks at RS and CI and therefore deduces that the relative safety of the stock is more current than over the longer term. Okay, now look at that earnings growth rate, 26%. Now I will tell you that that's actually higher. Now, first of all, that's a proprietary indicator, right? So you might say, Susan, if I go and I look at this in Yahoo Finance, that's not the same number. It's not supposed to be. This is a proprietary number where VectorVest looks at this. So the earnings growth rate of 26% is obviously really, really good. It's actually higher than what has happened. When you look at the revenue growth of the company, that has been very consistent at around about 20%, like consistent in the level of billions, which is very significant. So that here has a growth rate of 26%. But here now, let's get back to the overvaluation, right? Because I mentioned that VectorVest, when you compare price and value, says that it's currently overvalued. Look at these on the more fundamental metrics. One here, you can see the PE ratio is headed for 40. And 40 is, quite significant. The earnings yield then, of course, which is reciprocal of that, is only 1.16%. The dividend yield has fallen below 1. It's now at a dividend yield of 0.96%. Dividend safety is pretty strong. And I can see why. When you get in and you look at the numbers and you see the free cash flow and you see that they're buying back their own stock, I can see why. But it still is below 1%. And anyway, there's other elements in there. So that is what VectorVest is saying. If I was to summarize the picture, it's overvalued on a couple of bases. When you look at fundamentals, when you look at when you look at the valuation difference between VectorVest's price and value, and then separately, when you look at the longer term, it's got strong long-term consistency and predictability. It's got good long-term value into the future, but that the comfort index is less than the relative safety. So it's just saying that the consistency is more so in the shorter term. It's over the longer term looking back is where you can see a little bit more of that volatility. So it is still got a buy recommendation, but it is a stock that has, the stock market's pulling it back now and saying, okay, let's take a deep breath here and let's see where this company is going, because up until this point there was much higher expectations built into the stock than the management were conveying to the world. Okay, so let me check on my time there. Let me check on the chat. Okay, let me just take a look there. Right, let me see. Mangela says it's way above in volume weighted moving average. Interesting that's the metric that you look at. I see Just Jay saying about he's asking for more people to like the episode, so please do heed that guidance. It's interesting as well how a couple of you there are just talking about some technical indicators you use, like RSI. And Bart says, yes, relative safety stocks, Rock and Belgium. Yeah, we see that all the time. Bart, I was over for the VSB. Oh, sorry, God, the name is the show that I was over there in March. I was over for that show, and again, like, I had a good chat with people. Relative safety is what you continue to really, really like. So Pete says, so are you saying you would buy AVGO on Monday if it was rising, or is there a broader market concern since we're now at the MTI of 1.53? Now, I'm going to defer to Rick because he's going to talk to you a lot more about the global market per se. I'm not necessarily saying to buy it at all. I'm simply saying this is how the market is interpreting. And like a lot of cases, Pete, there can be differences in a stock's perception from a fundamental versus a technical point of view, from a long-term versus a short-term point of view. And a book that I often quote here on the show is The Psychology of Money. And it's one of the first things Morgan Housel talks about. At the beginning of the book, he talks about lots of us go into the market with different expectations. If I'm buying for my pension versus I'm buying on a trade, if I'm selling a put because I want to generate income, whereas somebody else is buying a put because they want to protect their long-term pension. Like, we all come with different expectations. We all come with different risk profiles. The market doesn't just say one thing. And that's what I seek to bring here, is to bring that value to you, is to help you distinguish how to discern what's going on with the stock, or what's going on, broadly speaking, with the market, is what Rick will do from your own personal perspective. Yes, VFB, Bart, that's what I'm saying. That's exactly it. Thank you very much. And Donald says stocks can be overvalued for a long time. I think value is a great thing to use for longer term, as Susan says. Yeah, I think so too. I certainly do think so. It's, VectorVest never says if a stock is overvalued, sell it, ever. Like, it doesn't say that. It asks you to go on and analyze the other things and the other indicators, like I've done. So don't just look at overvalued and say, oh, right, I can't buy it or I have to sell it. There's more nuance to it than that. Now, I did see a question here. Lauren says, a quick question, does Hayman's have a US ticker? I actually don't know, because I didn't look into that. Obviously, as a European-based and a Euros-based investor, I was very happy to go in and buy it in euros. It's the currency I earn in, it's the currency I spend in, and it's not the only currency that I invest in, but that is why. Now, I could go and I could check for you pretty quickly. If I just search here and I HEI, what I would need to do now is I just need to take this out. HEIJ. I'm not seeing it there. Lawrence. No, I'm not seeing it there. HEI. Rheinmetall, of course, is another one that's getting a lot of attention this side of the world. No, I'm not seeing it there. So where I bought it anyway was euro-based, and as I say, it's working out well. Okay, now what I'm going to do is go into the earnings call itself. Okay, now that I've brought that there to you. So what I'm going to do now is I want to bring you through some of the terminology here, right? So now that we know what VectorVest thinks, let me just point out to you the key takeaways. The motley fool here is what I'm looking at. It is giving me the transcription. Now, a couple of people ask me these questions that I get all the time, so I'm going to give you the rapid fire answers. Number one, do you have to be a shareholder to go on the earnings call? No. I have not. When I went on the Lululemon one, or the Tesla one, or the Intuit one, I wasn't a shareholder in any of them. So you can absolutely go on you can just go to the website, search for investor relations and the earnings call, and you can go straight in. Second question, it's recorded live? Yes, but you can go and then look at the transcript. So you don't just have to look at it. I'll often go to Seeking Alpha, or I might go to Motley Fool. I simply Google, say in this case, Broadcom earnings call transcript, and I'll go and I'll be able to find it then. And the third thing then some people say is like, God, a lot of it is often very positive. Of course it is. But that's why you would listen to somebody like me, or you would go and look at the analysts, or you would analyze the content around it. I've never been on an earnings call that say everything's bad. They'll tell you things are challenging, or we're really proud of the team, of what we've done. You know, I've seen certain things maybe where they won't take any questions from analysts, or where they'll be, quick to manage it. But remember, this is the management of a company speaking to its shareholders, or aiming to get the message out to analysts. Of course, they're going to tell you the positives. And that's why it's important to be critical of them, and to understand what's going on in the business and how it compares, and then having a very objective, algorithmic, proprietary view like VectorVest. That's the difference. Okay, that is the difference. Okay, now, yeah, interesting there. I think these are more so for Rick when it comes to him. Donald says MTI equals 1.6. Market is looking for top of the USA, 1.3 in Canada. Like I say, Rick is going to bring you around the world in a little while. Now, I am going to spend the next 15 minutes delving into this, okay? If there's anything you don't understand or anything you want me to clarify, please do pop it there into the chat. As you can tell, I'm keeping an eye on you here. And of course, pop your questions into the comments if you're not watching this live. Right, we'll start at the start. This is a big number, right? It's a big number. To say that revenue has grown by 20% is very significant. Now, again and again and again in the prepared remarks, we come back to this point. In the Q&A, we come back to this point. Just let me explain to you what revenue is. It's sales, right? It's what they call the top line figure. It's right at the top of the profit and loss. And that means that for every dollar that Broadcom sold last year, this year, it's selling 120. That's basically what it means. So 15 billion for Q2 for the full year of 2025. And that's up 20% year over year. And also, and this is where Rick now will be sent off down his rabbit hole. Also, this is the first, the prior quarter was the first full period with VMware. Now, VMware is a company that they bought, and again, it appears quite a lot. But since the company has now acquired and is now a full year past acquiring VMware, all of this growth is now organic. So this isn't buying a company and then that company is just, stuck that revenue in. Instead, this is now all organic. And until, of course, it goes on its next acquisition spree. This is the one then this is the one that a lot of investors look at, a lot of analysts look at EBITDA. Right now, I'll just explain what EBITDA is, and I found a very interesting reference to EBITDA deep into the analysis that I think a lot of people missed, and I'm going to pick up on that with you. But first of all, what is EBITDA? EBITDA is earnings. Okay, so another word for profit. Before, that's B. Now the next four: I is interest, T is taxes, D is depreciation, and A is amortization. Depreciation is when you take something that you've bought in terms of capital. Like, so if I bought this laptop and I'm going to have it for 3 years, well, then you would depreciate it over 3 years. You wouldn't just put in the cost of the laptop as an expense. And then amortization is the same idea being applied to intangible assets like royalties, or like patents, or like brand or goodwill, etc. Okay, now really, let me get to the heart of it. EBITDA is a really good measure of how the operating business is doing, because if you think about it, tax and interest aren't a function of the company's business. They're not a function of how well the company is doing. Interest is a function of interest rates. taxes is a function of the subsequent profitability of the company. So when you look at EBITDA, and both depreciation and amortization are non-cash, right? So EBITDA is a great way of actually looking at what's really going on in the business that's generating money. That's what that's for. And like I say, stick with me, and I will show you a number that is just a very good guidance a little bit later on that I just think was missed in the overall commentary, and I'm going to talk to you about that. But now that you know what it is, I just now want to say that the EBITDA was 10 billion, a 35% increase year over year. And here, like, if I was to show you this, right, in a company that's growing 20% of its revenue, and yet EBITDA is growing 35% of an increase year over year, it just shows the company is not just making more money, it's making more money when the company makes more money as well, progressively. Those two numbers are really impressive of a company of Broadcom size, yet the share price fell. Why? Because investors expected more. Now, before I go on, let me just tell you what Broadcom does. Somebody told me yesterday Broadcom makes chips. It doesn't make chips. It makes the pattern, or it designs chips. It doesn't manufacture them. So it's just important to be aware that what it does is that it designs things that connects data centers together. It designs things that makes data move quickly between data centers. It designs support for AI to run, and I'm going to talk to you about two terms come up here a lot when it comes to the AI references that I want to clarify for you. So it's in the semiconductor business, but it doesn't make semiconductors. It designs the chips that are subsequently manufactured elsewhere. So just want to start off with that, okay? So overall, when you look at these two numbers, that's pretty impressive. Now, right, let's get into this, what they call the segment. Now, let me just take a look here what he's saying. Can I invest in Europe as the US market is in chaos with tariffs? Yeah, you can still invest in Europe. Yeah, like there's nothing stopping you to do that. Where can one view analyst expectations before an earnings call? All right, Tom. Yeah, that's an interesting point. First of all, it's important to remember that the companies often set the guidance themselves, and then it depends on who you're looking at. I'm going to show you an example of an analyst's expectations. Now, a new price target they've set, and somebody was asking a question on the earnings call. So I'm going to show you where to find that, and that probably will answer your question. Yeah, there's also, let me see, Tabula says, Michael, I agree. Let me see now what she's agreeing with. I'm going to go back up there and see. Is Susan still the managing director of VectorVest Europe? Yes, I am. Why no discussion of European stocks ever? Oh, there is in my views every week. That's there every single time. You can go on there at any stage. So last week, or sorry, in this week's views, I talk about Ozempic. Novo Nordisk, of course, is a company that manufactures Ozempic, and they have another weight loss injection drug as well. Oh no, often there's a conversation around those for sure. Now, okay, back over here. So to get into the segment revenue, so the semiconductor revenue there is up 17%. The AI semiconductor revenue there is up 46%. 46%. And it's interesting, you know, some of the commentary during earnings season has been, what companies are really making money out of AI? Like, is Microsoft really making money out of AI? Is Google? Now, Google, certainly with its AI overviews, they're now making 1.5 billion AI overviews. Like now, if you search on Google, the first result, certainly where I am anyway, isn't a link to a website like it's always been. It's an answer to a question generated by an AI overview. So there's 1.5 billion of them every month. You look at Gemini that it's now producing to race against ChatGPT. You could talk about Copilot from Microsoft, but the one company that's really making money out of AI is NVIDIA. And I want to compare NVIDIA to Broadcom as well. And of course, that's what the market is doing when it's looking at somebody like Broadcom's earnings. So the AI conductor revenue then is up 46%. And I want to get into a further nuance on that in a little while. Now, then you can see the non-AI semiconductor revenue is down 5%. And that was one of the drivers of the price down. So despite the fact that AI revenue, as you can see there, our AI semiconductor revenue is up, and non-AI semiconductor revenue is down. And that's one of the things quoted by analysts. Then you've got the infrastructure software. This is, you know, connecting data between data centers, or connecting data in data centers between computers. That's up 25%. But look at these margins. And this is one of the things that really stands out to me around a business like this. The margin, the gross margin, is 79.4% of revenue. Now, what that means is For every $100 that they generate, it only costs them about $20 to actually make the product in the first place that they're selling. And if you compare that to the like of Lululemon, to if we were to go over there and we talk about Walmart, like Walmart was the first big box retailer that had come out and talking about everything that was going on around tariffs after Liberation Day and talking about just the impact that they're having on their margin. Look at that type of margin. It is extraordinary. Operating income then was up 37% year over year, like really impressive number, just not impressive enough, the market said. And then I'm just going to pop down here, to the free cash flow guidance, free cash flow. Free cash flow represents 43% of revenue. Now, that shouldn't surprise you. The fact that they're generating so much cash out of what they're selling, it shouldn't surprise you, because if they're up here, if the gross margin is almost 80%, it's saying that the cash that they have left over is around 43% of revenue. And then the question you should be asking as a potential investor is, what are they doing with it? Well, partly they're paying out some in dividends. A significant amount is going into R&D, and then a lot of it is they're buying back their own shares. And of course, then that concentrates the earnings per share as well, at a P/E ratio now of nearly 40. So I'm going to pop on down here, okay? Because I want to show you the guidance, and I want to show you this quickly because it just shows you here what they're saying is that they're forecasting revenue to be up 21% year over year. And this is the point. They're saying what you've seen is not just good, it's consistent. It is 20% growth continuing on into 2026. And when you look at the Q&A, over and over again, analysts try and find a way of asking the team, okay, what's happening in 2027? They don't tell you. They say, we're telling you what 2026 is. We're predicting that we're going to be on that same trajectory. That's it. And over and over and over again, they try and they don't get anywhere. And then they talk about the different revenue down here. And I just want to also bring you down here, a couple of things down here that I wanted to highlight to you. One is the inventory, right? So they've increased the inventory, and that of course would be wise given the fact that their sales are increasing. And also look at this speed. Look at that speed, right? 102 terabits per second capacity. Now I was saying, how do I explain, right? Because I'm not a hardware techie. I like technology. I like using technology. And I'm somebody that really likes to see how things work together, particularly from an apps or a systems point of view. But I said, like, how do I actually explain this one? Right. 102.4 terabits per second is moving 102 trillion pieces of data per second, right? Now, I still can't imagine like how much data is that. So if your broadband at home is 1 gigabit per second, which would be fast, that is 100,000 times faster. That is the type of product innovation that they're working on. And look, as you can see here, this is the guidance that they gave. And remember, it was 46% of AI semiconductor revenue. They say we do anticipate now our fiscal 2025 growth rate of AI semiconductor revenue to sustain into fiscal 2026, right? And again, over and over and over and over do they reiterate that point. Now, in the last couple of minutes that I have, I want to bring up a couple of things that I feel were missed a little bit, right? And that is, one of them is the debt, right? Just let me show you the debt. Let me go here and I just want to search the word fixed. Aha, here we are. Now, interest rates, right? Interest rates in the EU last week, just to pick up on the people who are saying I don't talk about Europe enough. I could talk about Europe for days. But the ECB rate was cut this week. Of course, as we know, in the US it wasn't. The markets are baking in not a rate cut in July, possibly in September, and even kind of with a greater degree of certainty next January, right? Depending on what happens with the data, particularly the labor market and other data like that. But the reason that I'm picking up on this is that look at, like, their debt is high. It is high. And look here, they ended up, they said they ended there with a quarter of 9.5 billion of cash, 69.4 billion of gross principal debt. Bear in mind, they made 15 billion in sales in a quarter, and they're borrowing 69.4 of gross principal debt. What I'm interested in, though, is the interest rate on it and how vulnerable they are to interest rate increases, or depending on, of course, like also what you're looking at the moment in the US is you're seeing it, particularly a riskier debt is getting more expensive. So here they're saying the weighted average coupon rate, that basically means the interest rate that they're paying is the weighted average rate here is 59.8 billion, and the fixed rate debt is 3.8% with 7 years. So they're paying about 3.8%, and the yield to maturity is 7 years. But then I looked at the floating rate debt, much lower, much lower, of only 8 billion in floating rate debt. So they've locked in the price that they're repaying in debt. So they're driving on in terms of this growth path, but they're not actually vulnerable to the floating rate interest rates, which I found interesting. But the other thing is, look at their appetite for debt, right? Look at this number now. I mentioned EBITDA to you already, but I want to, yes, here we go. He said to move to a level we feel no more closer than 2. They want a ratio of debt to EBITDA of about 2. So they want their debt in comparison to the earnings before interest, tax, depreciation, amortization of 2. That's a lot of leverage, but that's the guardrail. So as EBITDA increases, we now know what their capacity, not their capacity, their hunger, their willingness to take on more debt would be driven around about that guardrail. Now, in terms of the questions that were asked, right, as I say, over and over again, they tried, right? The analysts tried to ask about what's the look into 2027. Look how often they tried, right? I'm just going to search for 2027. Okay, down here. Let me see here. Let me go here now. You can see no update. It was actually one of the key takeaways here from the summary. No update on the 2027 AI revenue. No update, right? Here we go again. This was an answer to one of the questions. As we articulated, we eventually fix larging for the training models as we forecast and continue to do significant. Like, they're just saying what you're seeing is what we're telling you in 2026. We're not talking about 2027. Again, they tried again. We gave you a point a year as we come into the second half now. You can see here, I'm not giving you any update in 2027. And again, we did this. But look at the question on SAM, all right? SAM, S-A-M. Now, TAM is total addressable market. Let's just say the total addressable market, let's say your total addressable market of Irish tourists to the US is going to be the population, right? I'm planning to go to the US myself later on this month to go over and visit the VectorVest crew. So you could say the total addressable market of the entire population of the Republic of Ireland is our population, right? That's TAM, total addressable market. SAM, on the other hand, is serviceable addressable market. So let's just say then the US said, well, we're going to target business women who live in Dublin and work in the area of finance and education, right? And let's just say then I would be in that serviceable addressable market as distinct to male golfers. That'd be my husband. I'm not in that market. So the difference between TAM and SAM, TAM is absolutely everybody. SAM is the actual market that you're realistically targeting. Now look what happens here. So SAM, the analysts say, how is this changing? And this is a nuance I wanted to point out to you about the AI revenue, right? Because a lot of what they've been doing has been designing chips with a view to helping data centers and organizations train their models, right? Train their LLMs. LLM is large language models. However, now they're getting into inference, which is now that the models are trained, they're now inferring. So when I talk to ChatGPT, let's say, and I ask it a question and it generates an answer, that's inference. Training is when you feed the model with data with a view to training it. Inference is when you ask the model something now that it's trained, right? So it's interesting. The analysts then were saying, okay, how has SAM changed? How has your serviceable addressable market changed as a result that you're now moving into inference as well as training? And look at what happens, right? There you go. In the framework you laid out for us, second half of last year, which implies 60% growth, CAGR, that's compound annual growth rate, is the kind of right way to think about it as it relates to profile. Sonny then he says, yeah, yes, short answer. But now look what happens when this goes on again. He asks, a woman called Stacey Rascon says, so is SAM going up as well? Because now you have inference on top of training. So is SAM still 60 to 90 or is SAM higher now as you see it? And look what he says, I'm not playing the SAM game here. I'm just giving a trajectory towards where we drew the line on 2027 before. Again, they tried again to find out about 2027. I've no response to it's the SAM going up or not. Stop talking about SAM now. Now, is it Michael? Was it Michael who said, how do I know? Yes, Tom. Tom said, where can one view analyst expectations before an earnings call? Well, Tom, wait until I then went looking to see what the analysts thought afterwards. And who did I see? only Stacey herself. So Stacey then went on, despite she got that pretty terse answer, and look the way she answered it. She just said, "Oh, okay, thank you," right? And so she actually has upgraded. Over here, you can see, has upgraded the target price of Broadcom now up to 295, despite that, right? Despite that. So you can see here, and I found this on investors.com where there was a range of them. Let me see here, 18 analysts raised their price targets. UBS analyst Timothy Curie kept his buy rating and up the price target to 290. And as I say, then Stacey Raskin, sorry, not she, he reiterated his outperform rating on Broadcom and raised the price target to 295 as well. So you can find them. Depends where you look, but there certainly are very, very much publicly available. So that is where I wanted to finish on today. So in summary, what I want to talk about is, and if we could just go back to, I'm going to stop sharing my screen there, Joey, and we just go back to full camera before I hand you back over to Rick. And what I wanted to say here is, number one, earnings calls, super education. They are just a super economic business investing education. Number two, you have to understand what an earnings call is designed to do. It is designed to inform. Generally, it's very positive, but your job as an investor is to critique it. How you can do that well is using VectorVest, like I was showing you how I analyze Broadcom there. But it's important, even when using VectorVest or using any type of a tool, but particularly VectorVest, understand what you want. A longer term investor looks at CI, RS, RV. A shorter term investor looks at RT. And in the chat here today, you can see that people are also, they're applying different technical indicators as well. Number three that I wanted to talk about is, at the moment, somebody like the OECD and a range of other parties like that are pointing out that we are dealing with higher levels of valuation. Now, you know that. And the chat, in the chat as well, has been about how the MTI is high, and Rick is going to talk to you as he's going to bring you around the world. Now, of course, the world has seen a lot of geopolitical uncertainty and trade tensions. And so we are seeing places like Europe getting an influx of assets, and we're seeing a relative outperformance in Europe. So there are those dynamics as well. So are we at a time of higher valuation? Yes. Does higher valuation mean you shouldn't buy or that you should sell? No, that's where, but you do need to apply your own nuance. And then when you get into looking at an earnings call, I wanted to talk you through the accounting information. And also I wanted to show you a couple of things that I really picked out there. And finally, and in summary, Broadcom is a company that you're unlikely to actually interface with directly with the brand, but you probably interact with them quite a lot. Despite the fact that it had a sparkling set of results, the market wasn't happy and pushed down the price by 5%. And then also in comparison to NVIDIA, NVIDIA is something that it doesn't produce its own chips, but it's far more likely to be producing the physical things, or to be producing designs of things that go into pieces of software like what I'm on here today. Whereas instead, Broadcom is likely to be the glue connecting data centers, or the way in which data is transferred faster and faster and faster. And also, of course, as well, it is also moving into an environment where it's now working on inference as well as training, which is where the world is going anyway. So on that note, I am going to thank you so much indeed for your time here today. Thank you for being here with me. Thank you for your chat and your interaction. And now over to you, Rick, and let's take it home with going around the world with VectorVest.
All right. Thank you very much, Susan. Another great presentation. Really appreciate you coming and joining us with that. We were talking interestingly before. I did do a quick search for VMware through there. I think there was 15 references to VMware in that earnings call. I won't go any deeper than that. But Susan, it's kind of interesting. I watch Bloomberg US every morning when I'm getting ready, and they have Sonali Basak there. They have a commercial where she's being asked how much she loves earnings season, and she said it's like Christmas to her. So every time I see that commercial, I think of you.
Good.
She said it's like opening presents on Christmas Day for her. So, and she mainly covers the financial sector a bit deeper when it comes to earnings calls, and typically the U.S. banks.
Well, Rick, I just think, if you want an MBA that doesn't involve looking backwards, but looking right now, real time, this is it. So I'm preaching to the converted, and I should just let you let you continue on with what you need to do.
All right, appreciate it. So Susan does have to unfortunately leave us. We're not going to have her with us for the rest of the webinar here. So we'll bid you adieu, Susan, and
Thanks, Rick.
thank you once again. Very active in the chat during your presentation, of course. So take care. Have a good rest of your weekend. And
thanks so much, Rick. And every
Joey,
best wish to everybody.
All right, Joey, what are we gonna do? Like, I'm feeling abandoned and alone now. I don't know. Has anybody heard the term drop shock? I don't know if folks have seen the show Alone and Jay, was it Jay? Just Jay today. I'm not talking naked and alone. I'm talking alone here. So if you're not aware of that show, the premise is they take 10 people that are supposed to be survival experts, and they drop them in isolated places. They started dropping them when the show first started. They started dropping them on Vancouver Island, the northwestern part of Vancouver Island. So quite a few of those shows, even though it's a U.S. show, have been based in Canada. They've also done some in other parts of the world, South America, Asia as well. I think it was Mongolia, from what I remember. But anyway, drop shock is a term that they have there because they'll either get choppered or they'll be boated into their location, and they can do all the preparation they want, but when the helicopter or the boat leaves and they're there isolated all by themselves, they say they go through this drop shock type of scenario. All right, so that's what Susan's leaving us with today. Joey, just you and me to hold the fort now. And we are already almost at noon our time here, so let's get our slides going here. And I'll try to keep everything in order. All right, so we're going to do the global market review as we typically do here. And we're going to start, you can see we've got Canada. So there was talk in the chat about the MTI level. So it's definitely something we're going to be talking about as we go through here. So you can see Canada, we've got the color guard there. You can see the color guard reading 3 ticks into the green. All right, for the timing gauge and guidance, reading the color guard is bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. You can see for the Canadian market, not a red light in this extended version of the color guard that we're looking at here. You can also see a lot of RT Kicker confirmed green lights. Actually, wondering why we didn't have one there. That should be an RT Kicker confirmed green light for Canada on Friday. Yes, I'm just looking at the software. I can confirm that. So whenever I grabbed that image, I guess I did grab it after the data was finalized, I thought. But that would be an RT Kicker confirmed green light. So you can see the levels of all of the indicators here. You can see RT up at 1.11, the BSR up to 2.12, and you can see the MTI up at 1.54. So as mentioned in the chat, in the Canadian software, we give the warning, we start giving the warning at 1.20 to 1.30 and above for the MTI that the market may be searching for a top, and that downside risk may outweigh upside potential. So you can see the MTI in the Canadian market quite stretched from there at 1.54. If we go back about 10 years, there's only 4 or 5 times over the 10-year period that the MTI has got up to the 1.54 level. All right, so you can see year to date, The Canadian market back into a gain here of 4.47%. And here's a summary of our proprietary market timing signals. You can see the confirmed calls turned back up on the 2nd of May. The DEW turned up on the 28th of April. Green light buyer, just a fresh green light buyer there on Friday, the 6th of June. The primary wave turned back up on the 26th of May. All right, jumping into the US, you can see the US color guard here. Now there are a couple red lights still hanging around the extended version. You can see guidance, so market timing gauge needle and guidance exactly the same in Canada and the US. And you can see the US did have some green lights, but you can see finally on Friday they did get that RT kicker combo confirmed green light. You can see their RT level at 1.10, the BSR at 2.58. And as of this week, the US got into toppy levels for the MTI. You can see we give the warning on the US market at 1.50 to 1.60 and above. All right, so you can see they hit 1.53 or 1.50 on the 5th and then 1.53 on Friday. All right, so like Canada, they're in an up situation. And then if we look at their year to date, US market, the VBC at 1.90%. And we can see that the confirmed calls turned up. So US confirmed calls were down since the 10th of December, if I remember right. They finally did turn back up in May, 12th of May. The DEW turned up on the 23rd of April. Green light buyer on the 6th, so on Friday as well, 6th of June, and the primary wave turned up on the 29th of May. All right, here is how all of the VectorVest nations perform for May. So you can see we'll have that at the top of the graph there, year to dates. But for May, you can see Canada at 5.43%, the US at 4.76%, Australia 4.1%, and European Union 5.42%. And then you can see the year to date beside that. All right, so that's Canada and the US. Let's get to Australia next. So here's the Australian color guard. You can see market timing gauge needle straight up into the yellow. Guidance that reads the color guard is neutral. VectorVest advocates caution when buying stocks at this time. All right, and you can see also in Australia, you can see the 3 yellow lights across the top. RT sitting at 1.07, their BSR at 1.20, only one red light left in the color guard in Australia too, and you almost wouldn't believe, what's going on geopolitically, et cetera, with what we're looking at in market activity. I know it's been up and down, but it's kind of amazing to see how much up we've had during these times. All right, so year to date for Australia, 2.35%. And if we look at the summary of their market timing signals, you can see the confirmed calls are up since the 1st of May. DEW up since the 29th of April. Green light buyer neutral since Thursday, the 5th of June. And the primary wave turned up on the 23rd of April. All right, that brings us to the European Union. You can see their market timing gauge needle 2 ticks into the green, and guidance that reads the color guard is somewhat bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And if we look, you can see confirmed RT kicker combo, confirmed green lights for 3 of the last 4 sessions. In the European Union, their RT is at 1.18, their BSR is way up at 7.06, and their MTI also at toppy levels 1.52. Okay, they are in the up situation as well. And if we take a look at their year-to-date return, we're looking at 4.61% in the European Union. And here's a summary of their market timing signals. So confirmed calls turned up on the 29th of April. The DEW turned up on the 23rd of April, green light buyer, up on the 5th of June, and the primary wave turned back up on the 3rd of June for the European Union. All right, so here we have the market timing graph. So here you have Canada. Canada, a bit of an outlier in that the Canadian market was able to break past the old swing highs from back the end of 2024 into the beginning of 2025. Previously, the high here was the 31st of January. That was eclipsed back in this area. So new 52-week high was made Thursday. Weren't able to put in a new one on Friday there, but you can see we were dealing with this level of resistance here and finally broke through that. So right now, price action sitting at swing resistance or swing high resistance from that 52-week high put in on Thursday. And then you can see the support levels, pretty good support level here that we just broke through. And you can see if that one doesn't hold, we have another fairly good level down right in this area here. And then you can see the 65-day moving average. All the market timing indicators, as we've seen across the VectorVest world, all operating well above 1 at this point. All right. So that takes us to the US. So here you can see how on the US side, they're still struggling trying to get back up to the old swing highs here. And just like Canada at resistance, you can see the US dealing with resistance right here at this level. So they'll need to be able to break through that to challenge the next level of resistance right here before, possibly taking a run at the old swing high there. All right, and then you can see we've got a fairly narrow channel with resistance here, support at this level that price action had been hanging out in for looks like a few weeks. All right, so you've got support right here. And if the market was to pull back, if this doesn't hold, you have another level. Actually, this level here is one that I just have in there. All right, you can see market timing indicators. They're all well above 1 as well. Hey, here's Australia. So you can see Australia right at, so they're trying to deal with resistance at this old swing high here. All right, so if they can break through that next week, they could possibly take a run at their previous swing high from back in, it looks like February timeframe. Okay, so this level here, they'd now look to see if they could find support there. They have another level of support right down here, and then you can see the 65-day moving average down below that. Once again, all the indicators above 1, as we saw. And here's the European Union, looking quite similar to Australia in this case. You can see they've been consolidating for quite some time here, trying to break through the 100 level. So you can see they're making an attempt, and there's been several. You can see with the top wicks here. So if they can break through that level, they'll take a run at their previous swing high or 52-week high, and we'll see if they can break through that and keep running. You can see the support levels that we're looking at here, a couple old tops there. So a nice support level there. And then you can see if that one doesn't hold, we have another one just below that, and a 65-day, probably within that zone, that last support level zone there. And there you can see those elevated levels, especially for the buy to sell ratio in the European Union up above 7. All right, so that brings us to now. There were questions when Susan was doing the keynote presentation, I think it was Michael asking about being in the U.S. and wanting to look uh, to invest or trade internationally, worried about all of the geopolitical turmoil, chaos, whatever you want to call it. Now, I will say, unfortunately, that turmoil and chaos is affecting probably markets everywhere in the world, definitely developed countries for sure. None of us are immune from that. But if you are looking for options, don't forget, right in the US, you do have these global market tracking ETFs. All right, so you can find these in the watch list, in the US software, in the watch list under cherry picking. So we do have April, the way it looked in April from our last presentation, and now we have May in here. So you can see there has been a bit of a change. We've got a few that weren't in the mix back in April that have got into the top 10 of late. Taiwan, South Korea, to mention a couple. You can see the top 5 rounding out here with Greece, Taiwan, the NASDAQ, Netherlands, and Israel. All right, and then you can see the rest of the top 10 there. As a basket, there's 43 of these global market tracking ETFs as a basket in May, 41 winners, 2 losers. Overall, a 4.96% return. The VBC in that time frame, 4.76% return. So pretty much on par there. A little bit of an overachievement there. All right. So that's the month of May. And if we look into year to date, so now I've got May, the exact same image we had on the right side, just moved over to the left side. So year to date, you can see the top 5, Greece, Poland, Spain, Italy, Germany. You can see the returns there. You can see as that basket of 43 year to date, 40 winners, 3 losers. And that basket has 16.49% return versus the VBC at 1.90. So pretty good outperformance there when it comes to the global market tracking ETFs. All right, that brings us to also out of the US software, the performance of the market sector ETFs. All right, also found in the cherry picking folder in the US watch lists. So we can see 2025 year to date. I think we're pretty much all aware what gold has been doing for us. Gold has been almost impossible to let go because of everything going on. There's a lot more than just the tariff and trade situation. There's debt levels of every developed nation. There's the bond auctions, and the ones that have come to the forefront in the last few weeks have been the Japanese and the US bond auctions. All right. So gold has been moving back and forth, but overall, you can see when it comes to the sector ETFs in the US, year to date, GDX still leading the list. You can see with a 52.23% return. All right, and then rounding out the top 5 here, you can see metals and mining, so pretty good relation with gold there. Next gen media, industrial, utilities, rounding out the top 5. You can see communication services, US telecom, financials, water resources. I thought was interesting coming into the mix here, and then semiconductors. All right, so year to date, there's 30 sector ETFs. 17 were winners, 13 losers, 2.38% return as a basket versus, once again, the VBC at 1.90%. All right, and then we've got the 10-day delta. So if you're interested in seeing what sectors are moving in the last 10 days. This search I have in the Unisearch, and basically you can see spotter metals, 10.65% leading the way there for a 10-day price delta. You can see Invesco Clean Energy, solar, oil services, and there's GDX rounding out the top five. So oil has had a rough time. They have been range bound through most of the last half of 2024, but have started moving of late. And yeah, let me just see here if I have the right thing. So my YouTube screens are a little bit out of sync, but I think the chat is good. So I'm seeing Pete Baugh, irrational exuberance. Yeah, I can't think of any good explanation why all the markets have done this while we continue to have the threat of trade actions held against everybody. And no, regardless of what the media reports, there is no true trade agreement signed, at least new trade agreement signed. We supposedly have old ones, don't we? All right, and then yeah, Tabula saying astounded that the defense sector isn't there because it has been moving of late. All right, so that is the sector ETFs. Central bank, so in May, that's behind us now. Interesting though, keep an eye on this, folks, because we are seeing more of this. So you'll note that the US Fed held again, and they're expected to hold in their next meeting, even though we're seeing changes in the underlying data. And I won't go down this rabbit hole, but just do some searches on US data these days, and whether it's something that you can actually count on to give you a good sense of what's going on. I guess the accuracy of the data coming more and more in question, and we do see, and we've been seeing this for a while, more than a few years, huge adjustments on previous data when they announce current data, and that continues to happen. Don't forget the whole Doge movement has cut a lot of people out of government as well. So now you're starting to hear, oh, well, they can't report these numbers right because they're short-staffed, that type of thing. But one thing I want you to keep an eye on, so as the US continues to hold, notice what everybody else is doing. So the Bank of England cut 0.25% in May. Australia cut in May. All right. If we go into June, so this is the lineup for June. Now, some of us see it because the end of May was last Saturday. We're a little bit behind, almost a week into June already. So you can see Bank of Canada already came out. They held. The European Union continues to be in cut mode. All right, so they went from 2.40 to 2.15%. You can see, oh, actually, didn't get the right flag in there, but India cut interest rates, even Russia cut interest rates. So those are the ones behind us. The main ones we're going to look at, look, we have Monday, the 16th, we've got Japan coming on board. So keep an eye out on that one. All right, and then of course we've got the US that week as well, the 18th of June. And there you've got the Bank of England back up on the 19th of June. So those will be the main ones we keep an eye on there. Yeah, and I see Kevin saying so many government employees on administrative leave are still considered employed, so they don't hit the unemployment numbers either. All right, so that's the central bank announcements. Here's the essays from around the VectorVest world. Another great week of essays here. I'll quickly summarize them. So out of the US, from Angela Akers, hers was entitled Simple and Straightforward, How to Use VectorVest to Avoid the Third of the 7 Deadly Sins, which is greed, to avoid FOMO, and keep your investing actions pure and angelic. Let's put it that way. All right. Out of Canada, Don Reitzma wrote one entitled Making Money the Easy Way. We getting a trend here. We've got simple and straightforward, making money the easy way, how to use VectorVest key indicators like the MTI, and interesting how that's come up during this webinar to become one of the 20% a profitable trader. And then out of the European Union, we don't have her with us anymore, but Susan wrote one entitled, Is it possible to, or is it impossible to time the markets? How to use VectorVest to analyze companies' future prospects through the noise and conjecture. Out of Australia, Robert and Russell Markham wrote one entitled Top VST Stocks. It couldn't be easier. So there we have the easy way again. How to use VectorVest to easily blend fundamentals, technicals, and market timing to find stocks with great potential of outperforming the market. All right, so another great week of essays there. I would say it would be very good if you do see something there that interests you. Jump into the software for that country, go to the Views tab, and check out the essays there. All right. Now, I did mention, I think it was actually Tabula who had made the comment about never any European stocks. Tabula, every month on this webinar, we'll go through Canadian, US, European, and Australian stocks, and we'll try to give you a few picks out of each of the VectorVest regions. All right, so keep that in mind. All right, so that's the essays behind us. Here's the June Almanac. So over the last 29 years, according to the VectorVest Almanac, the price of the VectorVest composite has gone up 16 times for an average gain of 2.86%, down 13 times for a loss of 3.03%. So while June is typically thought to be a positive month, it is entangled in the weakest rally of all 4 seasons, the summer rally. All right, so that's according to Hirsch and Mistel's 2025 Stock Traders Almanac. So we have a bit of hope here, and we know hope is not a strategy, but nevertheless, with the lazy days of summer upon us, and we're into the month soon, we will turn over from spring to summer. So with the lazy days of summer upon us and vacations on the horizon, we've got a 55% chance of success. So we'll hope to see a win for the June Almanac. All right. Here's the earnings update from Angela's essay as well. We are winding down Q1 earnings season. One of the reasons why Susan was here today as well. So you can see, and there's a little bit of a warning here too, folks. So FactSet estimates Q2 2025 earnings growth. So the next earnings season that will start very shortly as Q1 winds down. So Q2 2025 earnings growth will be 4.9%. So that's the estimate. If it is 4.9%, it will mark the lowest growth reported since Q4 2023. So because Angela had that there, I thought I would include what the estimate was for Q1 earnings season. So if I jump to the next slide, look at that, 7.3% was the estimate for Q1. We're down to a 4.9 estimate for Q2. So keep that in mind as we do continue to watch these elevated MTI levels in all the VectorVest regions. All right. Okay, so now that brings us to trade ideas, and I've got a boogie here. It's 12:23 already. So I did something a little bit different for trade ideas for this webinar. And I mentioned talking about Australia. So this is the essay this week from Robert and Russell Markham entitled Top VST Stocks. It couldn't be easier. Hopefully I'll let folks read that essay for themselves, but basically some of the things they cover is, the beautiful ability we have of blending fundamentals with technicals. You know, the late great Dr. David Paul would always point that out with VectorVest, the only platform he found that he was able to do that. So that's mentioned in this essay. And basically the gist of this essay at a certain point here, once we get into this point, was what they did was they took the DW turning up on the 29th of April, and all they did was buy the top 10 VST stocks. Now, in this case, their quick test here only takes us to the 3rd of June. All right. And you can see quite an outperformance. All right. So all they did was take the top 10 from the 29th of April when the DEW turned up. And you can see this basket, 9 winners, 1 loser, 14.8% return versus the Australian VectorVest composite coming in at 4.46. So pretty good outperformance. So that got me thinking, you know, what's going on down in Australia? I thought, you know, are Robert and Russell a little bit crazy here? Had a few too many Vegemite sandwiches or something like that? How would this apply? Not only, so first, how would this apply if I used the other market timing signals in Australia to begin with? And then how would this apply in all the rest of the VectorVest world? So that's a little bit of the tour that we're going to go on now. All right. So so I didn't start with the DEW. I have all of these in order from our quickest market timing signal to our slowest market timing signal. So of course here we have the Australian primary wave. All right. So you can see in Australia using the primary wave, pretty much the same result, isn't it? So we've got 10 winners here, 10 winners, no losers. The primary wave turned up on the 23rd of April for Australia. 13.08% return for the basket versus 7.02% return for the Australian VectorVest composite. Here's the green light buyer. So it just happened in Australia, the green light buyer, and I'm using the green light buyer when it first turned up after the downtrend that we had, a little bit of a sell-off. So it turned up on the exact same day as the primary wave. You can see the 23rd of April. So the returns here are the same. The list is the same because they turned on the same date. All right, 13.08%. 7.02% for the composite. Here's the DEW. So for Australia, the story continues. You can see out of the 10, so the DEW turned up on the 29th of April. So 9 winners, 1 loser out of the basket of 10, 10.57% gain versus 5.0% for the composite over that same time. I hear you, Alan. All right. So that's the DEW. So, I mean, the great news here, Alan, is obviously it's not making Robert and Russell crazy. They were definitely onto something for Australia. The interesting thing is, are we going to see this across the board? All right. So that's the DEW. And you can see with the confirmed call, it is a clean sweep for the Australian market. You know, confirmed call, not quite like the other ones. You can see that one turned up on the 1st of May. We've got 8 winners, 2 losers. We've got a 9.72% return versus 4.12% over that time frame for the composite. All right. And that rounds out Australia. So you can see for the Australian market, that approach outperformed using every one of our market timing signals there. Now that takes me to the European Union. So European Union, if we look at the primary wave, theirs turned up on the 14th of April. Basket of 10 stocks, 8 winners, 2 losers, 14.01% for the basket. Versus the European composite with a 10.56% return. So we've got overperformance there. Looking at the green light buyer now, 8 winners. So green light buyer turned up on the 15th of April in Europe. 8 winners, 2 losers. The basket, 10.82% versus a 9.37% for the composite. So still outperformance there, not quite as wide as the previous, but still looking in good shape in the European Union. Here's the DEW. All right, so DEW turned up on the 23rd of April. 9 winners, 1 loser, 13.20% for the basket versus 8.53% over that time for the composite. And there's the confirmed calls. All right, so confirmed calls turned up on the 29th of April. We've got 8 winners, 2 losers, 10.31% versus 6.65% for the composite. So positive returns in in the European Union as well. So that's Australia and the European Union, where it is literally as easy as Russell and Robert pointed out. Now, we'll go to North America. You're going to find we have a little bit of a different situation, and there's probably some good reasons for that. All right, so I'm into Canada. This is the Canadian primary wave that turned up on the 11th of April. So you can see in this case, we have 7 winners, 3 losers. As a basket, a 7.51% return versus the Canadian VectorVest composite 10.87% over that same time period. So a little bit of underperformance there, still in that time frame, pretty short time frame there. I don't think anybody's going to complain about a 7.51% return, but underperformance of the composite for sure. And should I wait until I get to the US? Maybe I'll wait till I'll go through Canada and then we'll go through the US and I'll give a possible reason here. All right, so that's the primary wave. Here's the green light buyer. So it turned up on the 22nd of April. 6 winners, 4 losers. So the basket has a 5.46% gain versus 8.88% for the composite over that time. So some underperformance there. Here's the DEW. So here's where we turn the corner in the Canadian market with the DEW. So you can see the DEW turned up on the 28th of April. We've got 8 winners, 2 losers, 9.50% for the basket versus 6.41% for the composite. So we've got some good outperformance there. All right, and keep in mind, no trade management and none of that going in, no going through and selecting stocks at all, no looking at graphs. This is just strictly buying the top 10. All right, and if we look at the confirmed call in Canada, it turned up on the 2nd of May. So if we look at that, 9 winners, 1 loser, 10.87% return on the basket versus 4.90% on the composite. So DW and the confirmed call ended up working out nicely, like Australia and the European Union. Now we go to the US. So the US primary wave turned up on the 11th of April. And again, I took either with the primary wave or the green light buyer because we did see some whipsawing of both of those. I took the closest one after the sell-off. So 11th of April, you can see 7 winners, 3 losers. As a basket, a 0.26% return versus the VectorVest composite at 11.52%. So quite the underperformance when you look at that time period with the US as well. Now, I will hit what I think the big difference in Canada and the US were, if you think back to the April timeframe, I was covering this in the weekly market update, how it might not be so strange for the Canadian market at certain times to have the top VST stocks dominated by gold stocks. However, in that time frame, we were seeing the top 5 VST stocks and Midas Touch stocks in the US, all gold stocks at certain points. Um, we live in a world of very rare events these days, folks. That um, was a pretty rare event to see that on the US side, and we were seeing it both on the US and the Canadian side, where all 5 top VST and top Midas Touch stocks on the homepage were all gold stocks. And I think that has something to do with what we're seeing here, because I mentioned gold continuing to run, but it hasn't been a straight line. There's been a lot of back and forth through this period. All right, so that's the US for the primary wave. Here you can see the US for the green light buyer. So 5 winners, 5 losers. As a basket, that was actually a loss of 2.87% when the composite was up 10.29%. And here's the DEW. So there, 4 winners, 6 losers. The DEW turned up on the 23rd of April for the US. 0.13% return for the basket versus 9.08. So when we go to the confirmed call for the US, here's where you see on the US side, this is the first chance we get to turn the corner and actually have outperformance based on what they did in Australia. You can see the confirmed call turned up fairly late in the US on the 12th of May. But this basket gave us 7 winners, 3 losers, an average of 7.51% on the basket versus 1.62% on the composite. So pretty good outperformance there, but we had to go to the confirmed call to see that. So I thought that was pretty interesting how differently that seemed to work out. And we're pretty used to this kind of thing. When we see the special presentations, for example, a lot of times, of course, they're totally focused on the U.S. market, and typically we'll see something presented in the special presentation that just performs really great in the U.S. market. But if you try to translate it to the Canadian market, for example, it doesn't work out that well. All right, and here I think North America with those gold stocks reaching the top of the list in that April timeframe definitely probably affected the results in this period. If we were in a different period where that didn't happen, it'd be interesting to see if the results would be pretty much the same across the board. All right, so yeah, and Don writing in there, yeah, gold equals distrust and fear. And I guarantee you, folks, there are things, bubbling underneath the surface when it comes to bond rates, uh, bond auctions, yeah, that whole area of finance and economics that I guarantee you are the reason why we're seeing gold the way it is here right now. All right, so I notice we are over. So I've got everything, all the summary of all of those results by region here. All right, so I've got them all in a graph, so you can go through and, I started with Australia here. So exactly what we showed on those previous slides, I've just put into a table form. So it'd be a lot easier to go through and review how those turned out for Australia, for the European Union, Canada, and then the US. All right, so I'll leave that in there now. I did have something else lined up based on Ryan's special presentation this week. However, given the time, I won't be able to do that. So I'll look and see if we look at doing this one next week. But the special presentation, if you haven't had a chance to watch it yet, is entitled "The Climb to the Top: Discover Stocks on the Move." All right, and as I mentioned, it was presented by Mr. Ryan Shook, senior stock strategist there at VectorVest. And basically what he was doing was trying to find stocks on the move up the VST list. So looking for stocks in this case that a week ago weren't part of the top 20 VST stocks, and at the time of the search were. And I started looking at some graphs of stocks. Now, he was using a search that isn't in all of the other the country's software. So I did recreate that search in Australia and Europe. I believe it was in Canada and the US. But anyway, given the time, we'll have to visit that one at another time. All right, so we've got Susan already done. So we'll look to close out here, folks. And did want to make sure everybody's aware, VectorVest does have a Father's Day. Joey, is it Father's Day this weekend? I should know the answer to that one. Next Sunday? All right. So yeah, so we've got a Father's Day sale going on. You can see save up to 73% on stock market courses. You can see the link to go to there, vectorvest.com/sale. And you can see the offer expires on the 22nd of June. All right, so no better investment than the investment in yourself and the investment in knowledge. So here's another opportunity VectorVest is giving folks to do that at greatly reduced prices. All right, so with all that said, Marvin, you're welcome, and everybody else, Jerome, you're welcome. And I would thank all of you for coming and spending some of your time on the weekend with us. All right, and that'll bring us into the final slide here. As usual, folks, if you do have any questions, need any help at all, don't hesitate to reach out to support and training at 1-888-658-7638. I've got the local number there for in the US as well, for those who need that. We've got international numbers there as well. As we mentioned, this session is being recorded, so the replay will be available on the VectorVest YouTube channel immediately after the webinar. We've got the email address for support@vectorvest.com for those that need that. We've got Ray's email address. I should probably add my own there too. I do have people now that are sending me, some requests that they think would be good content for upcoming webinars. So if you have ideas that you'd like to see on the international forum, you can either email Ray at rayc@vectorvest.com, myself, rick.franklin@vectorvest.com. But with all that said, once again, thanks for spending part of your weekend with us. Have a great rest of your weekend, folks. Stay safe and healthy out there. And we will catch you back in the markets this week for another trading week. But for now, that's it. Take care. We will catch you later. Bye for now, folks.